Jamie's doing SPX in the morning using the breakout strategy. Breakout strategy, kind of, we found it by way of the X options lady. Her name is Ariane. And we took it and said, we can use this. So we use the breakout with PDT Hack. Jamie has done a bunch of back testing and feels like he's got something that's repeatable. So back to you, Jack.
Yeah, I don't remember putting it in those terms, but I'm gonna let Arlissa do what she do. Okay, so let me explain what's going on here first. So, give me one second. Now, do y'all see my screen?
We do.
So you see, you all see Thinkorswim?
Yep.
All right. So let me explain what the strategy is first. Then I'll walk through implementing it. So what the strategy is, we use it for SPX, and essentially it's taking the first 15-minute candle of the day, and she marks off the candle, the high and the low, including the wicks. Okay. So we'll mark the high and the low, including the wicks.
I always forget the wicks.
I'm sure you do, ma'am.
I know I'm not supposed to. I'm like,
miss only the body over here.
Yeah.
So she does the wicks top to bottom, and it so happens that she being Ariana, she's very precise about her numbers when she's doing it, because she has different strategies that she adds to it. But anyway, mark the top, mark the bottom. Okay. And then wait for a breakout on the top or the bottom. And wherever the breakout is, you want to go the opposite direction to place your credit spread. So obviously in this one, it went up. So we will be doing a call credit spread under. Okay. Now, and I'm going to walk through an example, but
not
that's
call credit spread, put credit spread.
You want to do a put credit spread. Thank you. You want to do a put credit spread under. So what's important to remember though is you want to see that it actually broke out. So let me do it this way. I'll just walk you through an example. So when I test it, I always go 10-15. I do 10-15 as an entry point, and I'm just using a random date, July 7th. It could be any date for the test. So this is July 7th. All right, and then we're gonna blow this up. Okay, so already it has went up, right? So usually you can get in like right here. However,
what do you mean here? What's here?
You can get in because it already broke out. So you can get in, put your CCS in right at this point.
Below the 4,400?
CCS would be
PCS?
I keep saying this wrong one. You put it in opposite, regardless of what I say.
No, we're gonna be clear.
Listen, that's what I'm saying. To be clear, always go opposite of the breakout. Okay. You always go in opposite of the breakout. But what she does is to put the trade in. So once you see that it broke out at the top, what you would be doing is you go to put the trade in, and actually I already used this date, so I'm gonna switch to a different date, so that way we can do a fresh date with no interruptions on it. Let's do 10-15. The reason why I do 10-15, and I'll show you in a second, is because I prefer to give it about 45 minutes because what I've noticed is that sometimes that breakout is a fake out. Breakout to fake out.
Oh my goodness, I was there. I was already there.
So sometimes what ended up happening is you end up thinking that it's going in one direction and then it doesn't. So we'll use this as an example. So normally what will happen here, we already know then that we are putting in the call credit spread.
Are you?
Here we go. I was saying it loud because I knew I was saying the right one.
No, you weren't.
Put credit spread.
Oh my goodness.
It is the put credit spread. It's the put credit spread. And when you go in here, you going on the 10th. And what you're looking for on the put side, what she does is she wants to get in for $1, right? So what you look for is, so I would say 4,400. So let's say 3.30. You want it to be about $1 difference between your strikes. So that's really that's how you're determining where you're going to get in at, is where the $1 mark is in here. So sometimes it'll be I've been noticing at different places in terms of deltas and things of that nature, but I usually just wait around to see which one of these ends up being around the $1 mark, and then I'll, it's not going to be exact because these numbers are fluctuating before you can actually get in, so that happens. But let's say if we did 4,400, just as an example. So it just went from $3 to $2. I mean, it just created a $1 just that quick. So this is $1.10 as an example. So I will get in right here and just wait. And then once it takes, I'll usually start watching the monitor. And of course, it does not feel this fast in real life. Please know that. So we are on the put side. Put side.
What did you have? 43.95, 4,400?
43.95, 4,400. That is correct. So what I do is, the very first thing I do is I create a duplicate order. Now, why am I creating a duplicate order? Because I'm going to create the PTI immediately, okay? But I also, in Thinkorswim, I do OCO because I put in a bracket order together. So I do OCO, and then I create an opposite order because this is where I'm going to do my stop. All right. So when I put in, and then I just make adjustments to this particular. Remember, for the PDT hack, we have to do the same trade, but on the opposite side. So where you sell, you would normally buy. This is going to turn green, but I'm switching this to call, right? So now, just with those two moves, I'm buying where I sold where I bought on the other side. This right here is where I can take my profit, right? So let's do the math on this. So the spread is 500, right? They're giving me $1.10 or 1.10. That's $3.90. I always take $60. I always do $60. So 4.50 is what I need to put in here for me to get my $60 profit. So for this PDT hack to be complete, 4.50. Okay. And actually, let me do it this way. Annotate. Looking for my annotate chart so I can make sure you see it. So to put that in perspective, the box 110, which will leave 390. Excuse my three. I don't have a fancy pen like Arlissa.
Tools of the trade.
Yeah. I gotta step my game up. Big time. So 110, 390. So you know that should be equaling 500, right? According to we want, I want $60 profit. So 390 plus 60, 450, right? So we know that those two, is that right?
Yep.
450? The math is correct.
Mm-hmm.
All right, so then 450 plus what? Gives me 500. So I know that those two numbers are right. So I can subtract these two. You know, this minus this is gonna give me the $60. This minus this is gonna give me the $60. And that's how I know that mathematically this number is correct. All right. Then what I do down here is I do 3 times the amount that I took in for my stop. And this is the most important part. Click stop to make sure that it's the stop. It should say market right here. So to recap, all I did was switch. I did a duplicate order initially, and I just switched it to a sell. I switched it to call because it originally was buy. And then I put the number. Ma'am, what are you doing?
Doing the box again. Christian asked us to see the box again. So keep going.
Oh, I'm like, dude, you gotta let me know, man.
I know.
You know I watch Freddy Krueger.
My name is showing up next to the drawings.
No, it's not on my side. I just see red writing happening on I live by myself, man. I don't watch too many scary movies, fam. You gotta, brother. You and Saeed be doing that phantom drawing stuff. Anyway. So that's the box. So 450 is right here, and 330 again is what I'm putting in for my stop. But I cannot overstress making sure, if you do it this way, just making sure you make those changes, because you want to make sure it's the opposite, right? You want to make sure it's the opposite. This says this is called here, this is called here, and confirm it's in. Now, because we are on the weekend, this might go through and not act right, but we'll see. On the chart, this is what it looks like. Because I have mine set up to, listen, can you remove
Yeah,
it?
you can too, but yes.
Oh, can I?
Yeah, you should be able to clear all drawings, but I didn't. Go ahead, I got it.
Okay.
Okay.
So this is the stop, okay? And then this is limit order where I want it to go out. Now,
okay, so I want to clarify something real quick just before you keep going. So the opposite trade for the PDT hack, the first trade was a put credit spread, right? So the first trade, his first trade he did was a put credit spread because it broke out going up. The second thing he did was the call credit spread with the $60, you know, this was with the $60 profit. This is where he wanted to be able to take profit. But the third thing he put in that other box, he used the the put, basically a PCS as a stop loss. He used the stop loss on the PCS side to say, okay, even though I would like the call credit spread to pick up for $60 profit, if it doesn't and it goes the other way, he's putting in a put credit spread stop loss of 3 times the 110 that he took in for premium. So he put in 330 as the stop loss for that put side. Okay, so just know that if you're doing the stop loss is also the same as that first trade. The call credit spread, or the opposite one, is where you want to take profit or mark in your, you could also do, Jamie, I don't know if it'll let you on Tasty Trades, but you can do number 3 could be a call credit spread with a different price there. But I won't confuse anybody else.
You're confusing me right now, so we'll stick to the rivers and the lakes that I'm used to, player.
Yeah. What I'm saying is, if you can put a call credit spread in for $60 profit, you can also do a call credit spread with the amount with the 330 in it. You can also do that, right? You could do the same trade as this. This is going to be for profits, and this other one's going to be for losses. But again, I don't want to get you or anybody else confused.
But would you be putting this one in, this call credit spread in? You wouldn't be doing that as a stop though, right? Or would you?
Yes. You'd put in like you just did with your bracket order. It could be because basically your bracket order says if either one of these things hits, then fill it.
Okay, yeah.
Right?
I ain't familiar with that part of it, but I will definitely take your mathematical word for it.
Okay. Will the stop loss trigger a day trade? Yes. The stop loss will trigger a day trade.
Yes, it will.
Yes, the call credit spread, which is why if you did the CCS, if you did your 3 instead of the PCS, if you did this as a call credit spread as your third thing, let's take this part off. Then this is basically doing the PDT hack for a loss. Like we were just talking about, you can put in the lesser than the 390. So if we had our boxes, let's say I'm looking at the box, I'm going to make sure that everybody we talked about boxes there, right? So if we had our box here and we had 110 here, which meant we had 390. And if we were locking in a loss, if we put 330 here in the call credit spread side, then that's locking in a loss of that same 330. And this will not trigger a day trade.
But you're not doing what you just said until you think you're locking in the loss, though.
Right. If you put a stop loss of a PCS on, you're doing the same thing. You're basically saying if it hits this number first, then close it. So once you put that order in, you're saying if it gets to $60 profit, feel that. If it gets to 330 on this put credit spread, feel that. You're basically saying feel whichever one hits first. And I'm saying the same thing. I'm saying, well, if you do it as a call credit spread, it's if it gets to the 450, then fill it. If it gets to 330, then fill it.
Okay. Well, I'm only gonna speak to what I've been testing.
Okay.
So
the reason I'm here though, the reason I'm staying here for a little minute is the main reason why we use the PDT hack is to avoid the day trades. And if you get in a situation where this put credit spread picks up, if you have that order in as a bracket order and the put credit spread picks up on that side, that is going to be a day trade. Which the whole reason why we're doing the PDT hack is to avoid day trades. And you're getting the same results by doing either one of these. Just one of these is going to cost you a day trade, the put credit spread, and one of these will not.
Okay. Well, I'm doing it the way she showed it.
Okay.
So I can't confirm or deny what you just said. I'm not doubting what you're saying, but it's not what I tested, so I can't vouch for that.
Gotcha.
But I hear what you're saying, and that's a different thing for me to test.
Okay.
I only know of what you're speaking of within the context of if I'm locking in a loss meaning the trade is went against me, and I need to recoup. So that's the only time I'm aware of using what you're saying. It didn't even dawn on me that that was a saving the day trade. I was looking at it more so from the perspective of locking in a loss.
Yeah, which is the same thing. The PCS and the number 3, both of these threes are doing the same thing. Both of them are a stop loss mitigator, basically. That's what they both are. It's just one of these stop loss mitigators. They're costing the same amount of money. They're doing all the same things, except the PCS one is going to cost you a day trade and the CCS one is not.
Okay, well, y'all do what Arlissa says do and ignore what I just told you.
Not y'all do. I'm just saying. I want us all to understand.
I'm just saying. I need you to contact Ariane and let her know that her.
Yeah, well, Ariane also has an account that's bigger than 25K, and she doesn't care about the day trade.
Oh,
and
yeah, that is true.
Right. So she is not concerned about that. We are. So we're at this point, the whole reason why we're doing the adding 60 or subtracting, whichever is so, and she's also in Canada. Yeah. So we're concerned about the day trade where she is not.
Okay. Well,
right,
for the record, everybody, I wasn't privy to all that information when I tested the strategy. I was just testing what the woman presented, and this is what I can say works.
Okay.
So put your stops wherever Arlissa tell you to put it. She's a mathematician. Just test it, test whatever in your sound. Overall, the concept of the breakout strategy is a good strategy. But I will say the things that are that I look out for, generally speaking, I have noticed that. So the reason why 10-15 I look at it is because of stuff like this, where the breakout strategy is saying once it goes up, you know, you go the opposite way to put in the credit spread. But I also notice that sometimes it'll fall back in like this.
Mm-hmm.
So, you know, this right here is basically saying, you know, hey man, this might, you know, drop out the bottom. And so by 10-15 is kind of when I start going, okay, let me just at least get an idea. If I start seeing this mess right here, I'll just move on and not even worry about trying to take the trade. I like to see where it's a definitive push up to some degree in either direction. Once you start seeing it basing and doing things like this, it may or may not go, you know, in a direction that you might be satisfied with. So I usually will just go, you know, just move on. What time is it on this? Where's my time? 10:30. So usually, because this is so close to the line, I probably would have waited because I wanted to see a nice little push out, and I may not have gotten in right away, just to wait and see what's going to happen. But the strategy itself has been, I would say 90% of the time it went fine.
Mm-hmm. Okay.
You know, and even when she shows on the video, you know, the majority of them have been wins. So, I mean, I would say out of 3 months of testing, to be honest with you, out of 3 months of testing, I had more issues with the brokerage itself than I did with the strategy.
Okay.
And you know, some brokerages, for example, may only let you do, let's say, 2 brackets, you know, at maximum when you're trying to close. Tasty Trade doesn't let you do you can only select the sell leg when you're trying to close. You can't do both legs. And normally when we close both legs at the same time. So now you got an extra step that you have to do in order to close on your credit spread, which I definitely do not like that. Because I like for it to be just done and over with. But outside of that, yeah, usually, I mean, if it pushes up in one direction, as long as you get that $100 difference in there.
Yeah.
Sometimes it'll be 105,
Yeah.
110. But I do have, what I did was I just sat down and wrote out, if I get $1, $1.05, $1.10, what that would be for the box.
Right.
For my profit. So I have those numbers handy. And so when I get in, I pretty much know, what I gotta put in.
Sounds good. Cool. Anybody got any questions there? All righty. Thank you so much, Jamie. Clap, clap, clap it up. Clap, 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 clap it up. For Jamie, we got the breakout strategy with the PDT hack on SPX. I think a few people in the community have used that and have been successful. I know Miss Barbara's used it before. I think Miss Sandra may be using it. And they've had had some success with it. Ariane is called X Options. She started off with you can find her on YouTube. Her name's Ariane. She started off using the breakout strategy for buying calls and puts, and then she shifted over to using the breakout strategy with credit spreads. So we've watched some of her videos because it kind of matches what we're doing. I think she was using it on SPY. Maybe she switched over to SPX too. And that's that. So if you follow her on YouTube, she's been selling for a good little minute. All righty. Miss Saida, are you ready?
Yes, I am. Can you see the screen and can you hear me? I think you can hear me.
I can hear you fine. And yes, we see your screen. Thank you so much. Saida, taking the microphone. Woo-woo.
Hello, everyone. I'm going to talk about the plus or minus 30 strategy. I believe we were introduced to this strategy last fall, back when we were concerned more with the VIX. So for this strategy, it works best when the VIX is less than 25. I believe there's some other specific time frames on the power hour poster that's in the chat if you want to get more specific, but as long as the VIX is below 25, you should be fine. Usually around 12:45 to 2 is a good time to get into this trade. When it gets after 2 o'clock, we're talking about the power hour strategy. So this one you want to do before 2 o'clock. So basically what you're doing is you're looking at where the current price is between 12:45 and 2, and you're going to choose a strike 30 points above that or 30 points below it, depending on if you want to call credit spread or a put credit spread. So you know that the call credit spread is above the current price, so you're just going to add 30 to that to give you those strikes. So if the current price, as an example, is 44.31, and I go up 30 points, it's going to give me 44.61. Of course, there is no 44.61 for SPX, so I would go up to 44.65, 44.70 for my call credit spread. Now, there may not be any premiums there, meaning that the premiums might be around 10 or 15. What I'll usually do is put in an order for 0.25 and just let it sit there and wait for it to pick up. I like to use this strategy to create an iron condor where you get your put credit spread and your call credit spread. But I do want to caution that on a day when the FOMC is talking or something crazy is going on and the daily candle is a big red one or it's a big green one, stick to one side. So obviously, if it's a big red candle, stick to a call credit spread. I wouldn't mess around with the other side and vice versa. Now, I know I talk pretty fast when I get nervous, so are there any questions?
Fine.
Any questions?
Fine.
Hi, what do you mean if the daily candle is a big red? Which candle? What did I miss?
When you're looking at your platform, you can switch between the 15-minute chart or the daily chart. So I would look at the daily chart and you'll know if it's a big red candle. It might be some bad news or the FOMC is talking and SPX starts to take a nosedive and that daily candle is just long and red going down.
You're talking about the opening candle?
The daily candle itself, if you go into the chart, if it's the long red one, we're talking about
Okay, I'm not understanding. When you say daily candle, you're talking about the daily time frame, the first candle, the
Yes.
second candle.
the daily candle shows the entire day.
Yeah,
So
so
it's
you're doing the daily chart, the last candle you're looking at is the candle for that day.
Oh,
Okay,
okay.
so if you're on the
at
daily chart, the candle that you're looking at, that last candle is today's candle, is that day's candle. And she's saying if that day's candle is long and red, then you would only do the call credit spread. If that candle is a pretty good size green, then only do the put credit spread side.
So we're talking about the first candle for the day.
It's the only
On
candle.
15
It's
minutes.
daily. It's the only candle. If you're on the daily chart, you're looking at the candle for that day, not the first candle. You're looking at the only candle. You understand what I'm saying? If you're on the daily chart, the candle you're looking at, that last candle, is today's candle. Saida, do you have your platform open?
I do not.
Okay. Let me grab back the sharing, and then I'll do that. Okay. So if we're looking at, let me turn off on demand so it'll show like it's supposed to. But if you're looking at the daily chart. So you change this to daily, right?
We can't see your chart.
Yes. Can you all, oh, you can't see my screen yet? Let me see. Let me make sure I got us sharing. Come on. Here we go. Share your screen. There we go. So if you're on the daily chart, then the candle that you're looking at, this candle, the last one here, is the daily candle. It's a daily chart. This is the daily candle. So she's saying if this candle here is red, then that means you got a good red day going. You would do a call credit spread. If that candle is green, then you would do, I'm going to edit this study and take off that. I want to not show, not that one, the ATR. That one can go. And I want to take off my probability, not show it so it won't get anybody confused. Okay. This candle here, the last candle on the daily chart, is the day's candle. So she's saying if you're looking at 1:30 or 12 o'clock or whatever, 1 o'clock in the afternoon, then the candle you're looking at here is the daily candle for that day. Is that clear?
Yeah, I was confused because of what time frame, but you have to look at the candle of the time of day that you're going to trade.
Right. In the case of what she's talking about, what Said is talking about.
Yes.
He's saying, look at the daily chart, right? Look at the daily chart to see what is the candle looking like for that day before you decide whether to do an iron condor. If it's a big red candle, then you only do one side. If it's a big green candle, you only do one side. That's if you're using this plus minus 30 strategy that she is sharing. Okay. Don't see your screen, see your screen. 3 days ago, it's a doji. What would you trade then? If it was a doji, you would trade, you could do the iron condor. That's what she's saying. The strategy, the plus minus 30 strategy, is for iron condors, what we like to do with it. But when she gets ready to enter, if she looks and sees a big green candle like this one already at 1 o'clock, she'll only do the put credit spread side. If she looks at 12:30, 1 o'clock, and it's a big red candle, then she'll only do the call credit spread side. But generally, we're looking to do both sides. Okay. Saida, back to you, Jack.
Thank you. And I like to do iron condors because you're only using $500 of collateral to get 2 premiums.
Yeah. Go ahead and share again, Saida.
Okay, let me pull this back up. Hey, can you see it?
I can see.
So let's see. Oh yeah, so once again, especially on a doji day, you may not see 25-cent premium. So you may have to put in 25 cents in the box when you're placing your order and wait. It may pick up, it may not. Okay, are there any questions?
Okay, so this is another nuance to the strategy. So this is if you're wanting to trade SPX, you're not trading it in the morning. You decide, I want to wait maybe noontime, 12:30. I think Miss Cheryl was saying sometimes she's able to trade during her meetings. If you're coming between 12:45 and 2 o'clock, let's say this is around the time when you take lunch and you've got time to look at your phone and look at your stock, your charts and stuff, you can say, I want to do the plus minus 30 strategy. So she's giving you the guidelines between 12:45 and 2 o'clock. You may enter this. If everything's kind of, the candle looks okay for the daily chart, you can do the call credit spread and the put credit spread. Make sure you go plus 30 from current price, subtract 30 from current price, put in your 25 cents on both those trades. They pick up, then great. They don't pick up, you leave it. If the candle for that day is a big red one, then you do a call credit spread. If it's a big green one, you do a put credit spread only and wait, or don't even do the other side. Basically just showing that you can get in between 12:45 and 2 o'clock, get in earlier, maybe get a little bit more in premium. This allows you to get a little bit further away from current, from active price, and still be in the market just a shorter period of time and still pull in. If you do 25 cents on each side, then you're going to make $50 in premiums, which is a 10% return on your money. She gave us an example down here of what happened and talked about the candle at the bottom. What has been the back testing accuracy? Saida has done this live for a long time. Saida, you want to talk about your accuracy with the strategy?
I did this a lot. I'm a teacher, so I did this during the school day, and I would say I would have to go back and look at my graphs, but when it picked up, usually I was about a 90% success rate when it picked up. Sometimes on those doji days, the premiums just aren't there.
Yeah, this is just another strategy you can use. You can do the morning with the breakout and the PDT hat. You can do this afternoon, plus or minus 30. And now she's getting ready to share the 345 strategy with us. She's going on to that. Back to you, Jill.
Was there another question in the chat?
He was asking the back testing accuracy,
Okay.
and somebody said they liked the options. Yes, we got choices. We got choices in here.
Okay, so I wanted to remind our listener that she showed us this strategy back in December of 2022 during a pre-market call.
Wow.
I told you I had notes on this.
You did say that.
Yeah. So for the original strategy, this strategy you can do at 3:45 p.m. Say you were busy all day and you didn't get a chance to get into a trade, but you would like to try to make some money before the day was over. Turn to your 15-minute chart so that each candle represents a 15-minute span of time. And you're going to specifically look at the candle that starts forming at 3:30. So that candle is going to form from 3:30 to 3:44 p.m. Originally, we looked at the 15-minute ATR. If the 15-minute ATR number is greater than the 15-minute candle length when it closes at 3:44 p.m., then you're going to choose a spread outside of that last candle based again on the daily candle. So if the daily candle is green, whether it's long or not long, if it's green, you're going to choose a put credit spread. If the daily candle is red, you're going to choose a call credit spread. So once again, we looked at the ATR and made sure the ATR was greater than the 15-minute candle length. Now, I don't do that anymore. I just go outside of that 15-minute candle, and I still look at the daily candle to decide if I'm going to use a put credit spread or a call credit spread. Now, if the daily candle is a doji, I wouldn't recommend doing this strategy because you only have 15 minutes to make it work. It's hard to get out.
Right. Very, very true. I'm going to show you an example of that. Anybody got a question for Saida before I switch to a chart to show it?
And this moves pretty fast.
Yeah, this one goes, you got 15 minutes of time. So this is one of those, I won't call it a YOLO, but it's definitely a pull the trigger and it does what it does. Yes, you're letting this expire for real. This one is whatever you decide to do, you're letting it go 15 minutes. That's what you're doing. And I've cut it down sometimes where I've, watched it and said, I like these numbers. And then I've gone to the 10-minute and just waited because I like the strike, but I wanted more time to expire. So I've done that a time or two, but definitely it's the 345 candle. If you just want to get a few dollars at the end of the day. This is some people don't jump in on the 345 because it's not that it's scary, but it can be. It's the last 15 minutes and you can't get very far away because far away is no premiums. So you're looking at the 330 candle, which is this one. This is the 330 candle that has formed, right? You're looking at this one and you're saying you're looking at the 330 candle to say what happened between 330 and 345. It's a red candle. So you want to get outside of this one. Looks like we're going down. So I'm going to take us to the daily chart so you can see what the daily candle looked like when you're making your decision. The daily candle for the day was red. This was Friday. So before you enter the trade, you're looking to see what does the candle look like on the daily chart. It's red. So because of this, you say, okay, we got a red candle. We will be looking for a call credit spread only. And then you look at the 15-minute candle to say, okay, this was the one we looked at, this one right here, trying to put it back in place so that way it can be back with my little markings. Erase. I want this to turn to blue actually. This is the 330 candle we were talking about. So we would get a call credit spread above this. I want to say we went with 45.40 or something like that. So you can go with 45.40, 45 or something. Sometimes Saida will go 5 more points up. She'll go with 45, 45, 50. I think I was a little more risky than she was on that one yesterday. You can either go just above this and do 45.40, 45.45. I think this is the one I took. Saida did 45. I think we might have did the same one yesterday. 45, 45, 50. And you may take in, $25 here. I think I might have took in 45 on mine or whichever I did. But you're looking for maybe $20, $25 on that trade, and you're going to let it go 15 minutes. Notice the price still kept going down. And because you did call credit spreads, the price went away from there and it expires worthless. 15 minutes. And in the last 15 minutes, we have a virtual power hour in our community. So in the last 3:15 to 3:30 for sure every afternoon, we're all in the chat together and we're talking about, we used to have a live call, but we switched it to virtual where we're in the chat together. We're talking about what numbers, who has which numbers, what are we waiting on? If folks are getting a little nervous about what's going on, then we're there to help to support one another because trading, you need support when you're trading too. You trader support. We need to have that. Definitely need to have trader support. So we do that together. It doesn't matter if the 15-minute is a doji, just the daily candle. Yeah, I don't worry about the 15-minute as much, but you do care that if that daily candle is a doji, then you can't, you're not real clear on which way it's going to go at the end of the day, right? We are in Telegram. Thank you thank you, Saida. So yeah, I'm going to talk about that in a second, Christian. I'm getting a few more slides from now. I'll be at the place where we'll talk about how to keep hanging out with us because we're the cool kids. We're cool kids. I don't know if I'm a cool kid. I was always kind of nerdy in college. I had a lot of friends, but I was an academic student. So I was, my mama didn't play. I had a very strict mother. So where you would not find me in all the places where the cool kids were, you wouldn't find me there. My mama did not play that. So I didn't get to go to all the cool kids stuff, but I was popular enough in school. All righty, so now we've done the SPX strategy. We've done the PDT hack. We've done, Jamie did the breakout with PDT hack. Saida gave us the plus or minus 30, and she gave us the 345 strategy. All of those combination mix. Some people will do a trade in the morning, and then they might look at the plus or minus 30. Saida may say, I got time in the middle of the day. She'll do a plus minus 30. And then some few people who may decide they got PDT hacks going from the morning and decide they also want to jump in for a few more dollars at 345. Some people were busy all day long, and all they did, like for me yesterday, I didn't trade during the day. I'm really not a huge fan of trading on Fridays, but I did the afternoon stuff with XSP, and I did the SPX 345 candle yesterday. So some days it all depends. It's good to have the opportunity to do them, and you get to choose what works for your life. Yes, Marcia says she does the plus or minus $15 in the morning. Yes, she does. She does a plus minus $15. So XSP is the mini SPX. If you're on Thinkorswim, XSP is the mini SPX. It is also cash settled. That means at the end of the day, the trade goes your way. You get cash or you lose cash. That's how it goes. You don't have to worry about any shares, all the stuff that goes with that. You don't got to worry about all that. You're only doing cash. It's the mini SPX, so it moves just like the SPX, except for it's 10% of the SPX. So where the SPX price is 45.36, XSP is 453.63. Okay, it's a different, smaller animal, but you can get the same movement for less collateral. There's only a one spread on XSP. XSP is a one spread. It requires $100 of collateral. It also expires daily. It is cash settled, and you look for 10 to 15% profit returns, which means you're looking for $10 to $15 on each side. So there's a difference there. With XPX, you may be looking for $50 or $25 per side, $50 per side. You're looking for 10% returns on those money. If you go to XSP, 10% is going to be much less. So the trade-off is you put up less collateral, you're taking in less profits. All right. And if you want more profits, you just do more contracts. Good thing is you can do 2 of these or 3 of these or 4 of these. You don't have to do them in $500 increments. You can do them in $100 increments if you like. Okay, that's the major difference there. What does the mini mean? It just means it's a smaller version. I think maybe a smaller percentage of them. TD Ameritrade did not change the commission. It's still 65 cents. You can ask them to change. They will. So I've seen people in the past get them to adjust it down some, but their options contracts are 65 cents regardless of what equity you use them on. But I think when you do XSP and SPX, because those are indexes, I think it helps you from the tax implications. If you're, I'm not getting too deep into that because I really don't know. But I believe if you do indexes, you save money on taxes. So if we're looking at XSP, we do the same thing. This is what I do when I trade XSP. And I start in the morning and trade it throughout the day, because you can't necessarily wait till 3 o'clock on XSP because the premiums will be all dried up unless you get very, very close. So I followed the breakout in the morning. Jamie talked about the breakout strategy. I followed the breakout, and I enter one side of the credit spread after or around 10:15, about the same time Jamie's talking about, because I still want to, just like with SPX, you want to confirm the direction, because XSP is moving with SPX. So you're not trying to lose your $100 either. It's less money, but you're not trying to lose it if you don't have to. If it breaks out going up, you're entering a PCS. If it breaks out going down, down. If it breaks out down, then you're doing a call credit spread. We don't need two downs. It doesn't need to be that down. It just needs to be going down. I should have caught that last night. Must have been getting too late when I was putting that in. So if it breaks out going down, you want to enter a call credit spread. Use the probability out of the money. I'm using this column on the option chain. Use the probability out of the money of 75% or higher to pick your strike. Okay, I use 75% or higher to pick my strike. That's basically saying I got a 75% chance of these numbers being out of the money. Or you can use delta of 0.25. This is pretty much the same thing. Probability of 75% is the same as a delta of 0.25. If you see down here, don't know if it can get bigger, but I picked some places down here at the bottom of this slide. The 451 has an 84%. I actually probably would do 452 myself, but for the sake of this training, 451 would go with. And 456, I think I can see that down there, has a probability of 83. Again, sometimes I get a little closer, but 451 and 456 are good. These are sale legs we're looking at. These are sale legs on XSP. Okay, here's the example of what the chart looked like. This was yesterday. I wanted to show you an example of what the chart actually looked like when you were talking about entering. So the first candle here was the 15-minute candle. This first little doji looking thing that's empty. I don't know what makes these empty versus full on TradingView. Maybe somebody knows that. I don't really know what makes them empty or not. But either way, it broke out going downwards. So this second candle would be the thing that let me know we were probably going down. So the breakout downward, I entered the call credit spread using the probability out of the money in the delta. I entered the 456, 457 call credit spread. Notice 456 is above, it's way up here above where we started. Current price is at 450, 480. And I entered a call credit spread at 456, 457, and I collected $12. I did this at 10:15-ish. 10:15, 10:30. It really kind of comes down to when I think about it after the market has opened. I look to see what's there. Pick a strike based on that probability out of the money. Collected $12. So $12 off of my $100 of collateral is a 12% return. And yes, my plan is to let it expire worthless. So at this point, you got 12% return on your $100 if you don't do nothing else and everything goes well. Around noontime, sometimes 11, 11:30, it depends on the time, what I'm busy doing or not. I look at the chart for support and resistance on the opposite side. Remember, in this particular chart, I did the call credit spread first. So then I'm looking, after that, I'm looking for the put credit spread side because I'd like to use my collateral for as much money as possible. Use the probability out of the money, 75% or higher, to find a put credit spread number. I showed here, this is what the day ended up looking like. I entered the call credit spread back here in the beginning. I entered the call credit spread in this window somewhere in here. I entered the call credit spread, and now my call credit spread was entered at this 456 number. I did see that this was support here. That's what, 10:15-ish. I did see that support happen soon after I entered my trade, actually, and it starts going the other way, which is fine. It climbed and climbed, did its thing, hit that moving average and came back down and around. When it started to do this dance coming back towards it again, that's when I started looking for the put credit spread number. And I did a put credit spread at 453. Again, I used the probability out of the money to help me determine what strike. I used my chart and probability OTM to help me pick my strike. I picked 453. So I did 452, 453 put credit spread. And I want to say I collected another $12. Collected another $12. So total of these two trades, I collected $24 in premiums. That's an E, $24 in premium, which is a 24% return on collateral because the broker blocked up, that needs to be a C. The broker blocked up, it's a one spread. So the broker has now blocked up, what, 76 of my dollars? So it's a one spread. I took in $24 in premiums. The broker blocked up $76 of my money until the trade is over. When the trade's over, the broker releases all your money. Well, he gives you you get the $24 right away. When you're selling, you get the money right away. When it all goes well, you keep the money that you received. So that was yesterday's trade. And I only did one contract, but you know, I think Anand, he may be gone now, he had to go to work, but sometimes Anand will do 5 and 10 contracts. So if you find strikes that you like, you do, you know, 5 contracts, you multiply times 5, you do 10 contracts, I would have collected $240 using $1,000 of collateral. And this was a, you know, again, using a smaller equity and deciding what you want for strike prices based on the things I just shared. Questions there? Let me see what my next slide says. My next slide says, let's practice. We've been here for today's orders. Let's talk about what we want to do next. Questions we have, we've covered a lot of information. Your brain's probably getting a little tired, but tell me what we want to do next. Do we want to press on, look at an example inside of Thinkorswim? What do we want to do? Been here 2.5 hours, not quite 3.
Did you cover all of the strategies?
I've covered all the strategies. I've hit everything we gonna hit. Looking at, let's go to SPX. On the trade window, there we go. Probability out of the money. We're out of the money. We're out of the money. I would look at these 2 areas, maybe more so the 43.25 on the put side, and on the call side, I would look between these 2 numbers, which is 43, 45, and 50. What did I say? 43, 25, and 30. And 43, 45, and 50. Let's go see what kind of premiums we got in these places. Main weakness is setting up the PDT on opposite trade, so I avoid a day trade. Okay, so you want to be able to do PDT hack in the afternoon too? Generally, we don't use them in the afternoon because by the time you get to 2 and 2:30, at that point, you're in a place where you really can pick a strike that will make it for 2 hours. PDT hack is more useful if you're getting in the morning and you're gonna ride out. Okay, I got you. Okay, we can look at that too. We can look at the PDT hack in the morning. I picked some numbers, didn't I? Let's go to the vertical. And I think we said 45, 25, or 30. So if you're looking at 43, 20, and 25, this was we want to look at the 43, 25. The number you're looking for your sell leg needs to be on the side you're going with. So 43, 25 on the put side, what we came up with, right? Depending on how you feel about your closeness to the strike. I'm going to flip back one time to make sure I got the right number because I feel like 43.20. Nope, 43.25 was it. Vertical. 43.25. You're going to pick the bid column. You're picking the bid column, picking the 45. Come on. No, you picked the wrong one. Oh, no, I picked the right one. Okay, so it's gonna pay 47 cents. When you're in the sim or on demand, then these numbers come in non-fives, but in real life, it's 45, 50, 40, 25. There's no sevens and sixes. None of those are here, but in the on demand, it fills in with whatever number they like. Miss Barbara was talking about this locking. If you want that, you would lock this right here. That's gonna lock in that you want it to be for $47, period, right? For us, we're confirming and sending. You can see here, it tells you what's your max profit. It's going to be the $37. Your max loss is 463, which is 500 minus the amount you taken in. Your break even, what does the price need to be for you to break even? And all the impact to your buying power is all down here. When you're ready, we got paid $42. On the other side, we looked at 43.45. 43.45 on the call side is where we want our strike. Okay, turn this off. We're going to the bid column. Looks like $60 is giving us $60. And you're going to confirm and send. It tells you all the same stuff again, all about it, right? What I didn't do just now is I didn't look at the ATR and the IV and all those things because I can't see them in on demand. I can see the ATR if the chart would fill, but it doesn't want to. Implied volatility is not in on demand. That has to be seen in the sim or in your live account. You don't see it here. So, but you can rest, I'll say rest on probability, out of the money, and delta. So what do we have here? We've got 2 trades we picked up here. We did an iron condor. We received $64 and $42. So we've got $106 that we've taken in. And the max loss would be what, $394 is our max loss. This is our premium. This is our profits, the 106. The broker gives you that money right away. They put you that money right in your account. All goes well. Trade goes well. Now you need, this trade is saying that you need, the sell leg is what's important. The sell leg is 43.45. The sell leg is 43.25. This trade needs to close. You want the price to close between 43.25 and 43.45. You want the trade stock price to close between those two numbers. That's what we want out of this trade. Close in between here. I can't see the chart. So what I can't see without the chart is I would look, if I was doing this for, real life, I would want to see the direction that price had been moving all day. Had price been going up all day? Had it been going down all day? Because that would, potentially make a decision as to whether I went with one side or the other. Let's see, we're going to do 59 and see what happens if we get to the end of the day. See if our probability out of money held up without us being able to see all the other data points. And I don't want you to trade SPX without those other data points that you can confirm your entry. You want to confirm whether to do just one side or whether to do both sides. You want to confirm those things as you and before you enter. Doggone it. It's still buffering, so it's filling in, it's deciding. Okay, looks like the price of SPX is at 43.28. 43.28 is between these two prices. So those two trades would be good. Our money, we would keep our whole $106. We keep our 106 because we would have expired worthless. I'm going to show you what it looks like when you're expiring worthless. When you see the mark column tells you what this is worth. Okay, this is current worth. On the put side, we took in, what was this, $42? yes, we took in $42 of profits was a trade price. But when you finish it, when you're done here, yes, the current at the end of the day, this is worth 0. The difference between these two is 0. The difference between 0.025 and 0.025 is nothing. So you keep the 42. On the call side, the difference between these two is $64. This is your profits. And at the end of the day, the difference between these two is 0. Let you know that anytime the trade is going on, the mark is the current price of what's happening at any point in the day. And when you have a spread, you take the difference between the two, and that tells you where you are. When you're selling, you want price to go down from what you took in. You took in $42. You want this mark to be less than that. That lets you know your trade is doing fine. All righty. Questions there? I really feel like I need to see the chart for us to do a good PDT hack entry. I don't want to do it with a sight unseen. We need the chart. We believe in those. Questions?
It's
I
good.
think y'all will out. Go ahead.
Good guess on saying my name, by the way. It is Dutois, though.
Oh, Dutois. I like it. I like it.
Alyssa, if you could choose just one time a day to trade, what would you choose?
I like the afternoon time because I feel more confident that I've got less time to be exposed to the market.
Yeah,
With
less
being
less
said,
PM.
I also like the PDT hack in the morning because it gives you the opportunity to get in, lock in your trade with decent premiums, and then close it up, and then you got the rest of the day to, go on about your day. So I do like both of those actually, but I teach in the mornings usually, so the mornings don't always lend themselves to me. So the afternoons, I seem to have my more freedom in the afternoon, but I think it really needs to depend on whichever time frame suits your life the best.
Well, I'm a full-time trader now, so it all suits my life, but I want
Oh,
to get
listen,
where I'm just once a day. That's why I'm doing this.
I think if I was gonna do just once a day and I was full-time trader, I probably would do it in the morning. I would do the morning. I'd catch the volatility, see what's going on with that. I'd use the strategy to work for me in the morning. That way you go ahead and lock in your profits for the day, and then you can go on about your day with no thought. Saida says me too. If I had all day to do it, Saida's off on the summer. She's a school teacher also. And that she's off in the summer, she's doing mornings. Miss Barbara says me 3. Jamie says that's pretty much where I am at morning trading. So yeah, I think if I had the mornings, if my mornings weren't being interrupted by me needing to leave to commute to work, to commute to the school, I would go with it. It's all
I appreciate this presentation because it helped me to really clarify and simplify my steps for the different strategies that I actually already use.
okay. All right. All right. Jamie said next week the play is breakout with PDT hack, and anything after that is gravy. Let's look at 720. I'm going to see if I can go back to 720 and run the PDT hack going down, since we know this is a down day. I'm going to do that and see if I can, without the chart, see if we can run it on 7. That's not 720. It's like that's 7. Maybe it is 20. That's 720. Saida, when you do, and Miss Barbara, when y'all do the PDT hack in the morning, are you also looking around 10:15?
Before I learned about the breakout strategy, I focused on getting at the money at 9:30.
Okay, then
And
what did you do?
I focused on the futures and the VIX to tell me what direction SPX was going to go in. And even if I had to get into a PDT hack for $25, I basically was doing that. But now I'm trying to focus on the breakout strategy.
Okay. Okay. Miss Barbara, you look at 10:15 also?
No, I was trying to do like the 9:30. I was more like trying to determine the momentum until the other breakout strategy has come in. The only thing I would like to, I guess, add to the breakout strategy, and in, I guess, doing your top and bottom on the wick, for me, I wait on a full body candle to get outside to probably provide more direction for me. If it's
Okay.
kind of straggling, I was just like, this may not be the time for me to get in. And sometimes it may push, I may wait to another breakout. So sometimes it may be around 10:30. I did have a couple of trades where it was around 10:30 or something like that. So I'm still paying closer attention.
Okay. That makes sense. As Barbara's saying, she's looking at you want the full candle, another candle after that breakout of that first 15, you want a full candle that's outside of that range.
Yes.
Okay.
No straggling. No, not straddling it.
Like, don't even try me. Don't try me. You
exactly. Make up your mind.
A full candle is without wick, is what she's saying. Outside of the breakout.
Miss Barbara, you said full candle without the wick outside of it?
Yes, I'm not paying attention to the wick at that point. It's the full body of the candle.
Body of the candle. Okay. Open and close. Okay, so what we do know is this particular day was going down. So I'm gonna try to get us why is this not showing at the money? I don't have a line between current price and, nope, it hasn't, it's doing something or other. What are we doing? I want you to go to July 20th so I can see some numbers that match. It's still not doing. You may have to log up and back on demand. Time frame for the full body candle, 15 minutes. See, she's still in the 15-minute chart. I'm thinking you're still 15 minutes. Ms. Barbara, do you switch over to a smaller time frame to find that full body?
Nope, I'm still on the 15 at that point.
Ms. Barbara's like, do not try me. You need to do it. No, act right.
Exactly. I have blown up my account enough.
Ms. Barbara says, no, sir. No, sir. What we will not do today is play with you. But you need to have a plan. If you're going to get in that early, and you need to make sure that you can get out. But if, like, sometimes when we have red stuff happening before the market opens, you're watching those events, much more closely. If FOMC is coming on that afternoon, then we definitely aren't entering anything just before that. And if you're in something, you make sure that it's locked up with the PDT hack or wait till after 2:30, 3 o'clock, because premiums usually are still up real nice on those days because the volatility's up. You can still get decent premiums later in the day. Just wait to see what kind of direction it's going, and then get in on a trade. But we do know as sellers, time decay is our friend. Like yesterday, I entered a trade at 358. I entered it 2 minutes before I had the strike price I wanted, and I waited, and then I finally entered at 2 minutes before the market closed and collected those quick $25 in the last 2 minutes.
That's amazing.
The theta decay is our friend, mi amigo. Yeah, that was great. Yeah, I was risky. I was wanting to get the other side of our trade. We had done the 345 candle yesterday, but I wanted to get the other side of it. So I looked to see, I kind of had a number that strike in place anyway, but then I was like, what if it doesn't do? So I waited a little bit to confirm what I needed. Yeah, here we go. Come on, baby. Come on, baby. All righty, so let's say Jamie said we were looking for, let's say $1. We're at the 10 o'clock time frame. We're looking for $1 on the call credit spread side because we do know price is going down. So I'm going to pick this 45, 70, 75. Picking 45, 70, 75, and I'm going to collect. In this case, we're collecting $100, confirming and sending. Okay, so I did 45, 70, 75. Let me make us a little box real quick, because we're going to go to the other side for, okay, we got 45, 70, 75. We did a call credit spread and I collected $97. Okay, $97 of profit is what, $403 in loss. Max loss, if you're going to add your profit target here, let's say, for example, Jamie likes the $60, we can put 463 in the put credit spread side. Now, on demand may pick up fast because on demand sometimes will pick up much faster than real life, but I want you to see the mechanics. I put in the regular trade at first, call credit spread, 45, 70, 75. I'm going that same trade. I'm going across from those on those same numbers. I'm going right across to the put to the put side. Yep. And I'm selecting bid on those same numbers. 3.7 says here it's currently worth $4.15. We want $4.63. So we put this in 6.3. This is where you do want to lock it. Mine is locked. You do want it locked because you want it to pay you what you're worth. I want you to pay me what I'm worth. I'm actually putting in 465. Putting in, pay me what I'm worth. Same numbers. Now it says put, our first trade was a call. Put in what we want. We're good with that. Confirm and send. It basically says all the stuff that's happening here with that trade, and we send it. What it will do is, I'm looking at the monitor screen. It should stay in working. You see up here at the top, it is working. The current price of the mark status, remember mark is current price, it's currently worth $4.05. We want the price to get to $4.65. That means price needs to keep moving downward into the put. Basically, it's going to breach that spread until it gets to 465. See if the chart will fill in. It may not want to today again either, but I was hoping we could get a chart so we could look at, because we get dependent. Everything is based on our chart. We depend on you, chart. Come on, come on. So what I can't see is how long it'll take to get there. But once you put in what you're looking for, see now it's at 420. Price is moving downward because as it gets closer to this price, it'll continue to go up 465 and what we're looking for, and it'll continue. If you're doing on demand, I'm not sure if anybody's ever used on demand, you can always jump forward to see, maybe you jump forward 30 minutes to see what happens, see what the price is looking like. And sometimes with jumping forward, you can jump over the time that it may pass your strike. So you may not want to jump. If you're on demanding, you want to let it go ahead and kind of let it go and play its way through and jump forward maybe by 10 minutes, jump forward 10 minutes, 10 minutes. But you see now I jump forward 30 minutes and it's now in the area, it's getting closer to what we want. We want 465, it's at 455. But that's 30 minutes of time that I've moved us forward to get us closer where price has gone enough to now pick up. So I want you to know that the time it takes for the second side to pick up is going to be dependent on how the price moves. If price is still going into the direction you want, it'll pick up quicker. But if price starts dancing around and 11:30, it's definitely going to start doing its dance because it's getting into lunchtime, really like 11:30, 12 o'clock, not really 11. But just know that the second side takes a little bit longer sometimes to pick up. No problem, Terry. If you've got some specific questions, please ask him. He says this is a good training. It has fixed me on some things I was confused about. Thank you. Sometimes I get my mic to work, so I type. You can't get my mic to work, so I type. No problem. No problem. That was our version of the PDT hack based on the price movement. That's the price. I can't really show you with the chart. I just have to use the fact that I knew what was going on. Let's go back to our presentation so we can start wrapping this up. We can start landing this plane.
Do you have a stop loss that's your most common? Like, what do you use for a stop loss typically?
Jamie was just saying he uses the 3 times. I think it's good to have at least 2 times, 3 times what you took in premiums. You do need to have a space, some type of amount. I'm with, SPX being more expensive. 2 times what you took in is good. 3 times what you took in is really going to come down to what you're comfortable. What's your risk tolerance? Some people don't have as much risk tolerance as others. And sometimes depending on how the previous day went, if I had a trade that didn't go well the day or 2 days before that, then my risk tolerance disintegrates because you get burned a time and the next time can be a little gun shy. So it really depends. But I say 2 to 3 times is a good
2 to 3 times your net premium.
Yes, your net premium.
Okay.
2 to 3 times your net premium. I was looking for. So what can we do next? Definitely can join the SPX Telegram group. I was trying to cancel this so I could get it to I can grab these links. You can join the Telegram group. It's gonna give you a place to communicate with the folks who are also trading the SPX playbook. That's what that Telegram group is called. I believe it's called SPX Playbook. You can click on that. Rasta said, I didn't know about watching the red and green color of the daily candle affecting the 345. Yeah, we've talked about that a few times, Rasta. Maybe you missed it. And the plus minus 30. You can also join the I think Christian asked, joining the Educator2Trader membership. Our membership we trade together in the mornings. As far as trade together, we have a pre-market call. Let me start over. We have a pre-market call every morning, 8:15 to about 9, depending on, how much talking I want to do or Jamie wants to do. But it's like 8:15 to 9. We have a Telegram group where we all hang out and trade together there. We do live trading once a week when I'm available for that. And we have the afternoon power hour, and we have coaching calls every other Saturday, like I mentioned earlier, and we play our game together on the second Saturday. And whatever training, like I'm doing this training now, this is outside of our normal trainings, but the membership people always have access to whatever extra stuff I do, which we have a weekly group of people who are new traders. I teach them, and when we do boot camps, any of the other things I do, basically, the membership folks are grandfathered into all those things with no extra cost. The membership is $97 a month, and that gives you all the access stuff that I just mentioned on there. And you get one-on-one with me every quarter if you decide you're going to take that. Be sure to follow me on YouTube. If you haven't already, I am there, Educator2Trader, youtube.com/@Educator2Trader is where I am. youtube.com/@Educator2Trader. You can hang out with us on YouTube. I do a 2 o'clock live every afternoon talking about option stuff. Telegram for that SPX part is free. Yes, that Telegram is free for the SPX one for the people who are in this training or bought the SPX playbook. Very good. The Telegram for the part that goes with the membership, though, that's all underneath the membership. But if you did the SPX, that Telegram part is free. You can join the Educator2Trader Facebook group. We have a Facebook group. You can go look us up there, Educator2Trader. And of course, follow me on the social media platforms at Educator2Trader. Educator2Trader in all the places. So wrap up. We've covered the entire SPX and the XSP strategy. We have given everything that we know. I've given everything we know about SPX and how to make those work for you on a daily basis. I sure hope you've received value out of this and clarifications enough to be able to trade it starting Monday, or to use your on-demand to practice between now and Monday, so that Monday you can jump into your sim or you can jump into your paper trading account. If you're in that Telegram group, feel free to communicate about what you're looking at, so we can see if we can say, yep, that looks good, or nope, maybe not, maybe look a little different, look a little further, whatever. We can offer some guidance. You have strategies to match your life and circumstances. You've got morning, noon, 3:45, whatever one fits your life. XSP, if your account is smaller and a $500, collateral is more than what you'd like to do, use XSP for $100 of collateral. All righty. Be sure to watch this replay as many times as you need to. Once it's all uploaded and everything to YouTube, I will send you the link and you can have access to it for as long as you'd like. All righty. I sure hope this has been a wonderful afternoon hanging out with us. Well, more than afternoon, huh? We've been here for, now we have been here for 3 hours. Questions, comments? Anybody want to say anything? Jamie, you got anything you want to say or add? You're welcome. This has been great.
No. Yeah, I just hope everybody got value out of the information, and definitely check out the replays to first of all, skip over everything I said because I kept calling it through the call credit spread. Anyway, hopefully we'll see y'all in the membership group.
Absolutely. Rosin said it's a lot, huh, Miss Rosin? Arlissa just boom, 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 like a water hose. Cooley High. I think I may be able to grab the PDF and I could put that into the email that I send you as well. That way you can have the writing pieces, the slides that I have, you could have those, you could see those as well. Cool, wonderful, good stuff. You're very welcome. All of Saida's strategies are written down in one place. Jamie, Saida, everybody. All right, Ms. Barbara, thank you too for joining in. Appreciate that. Thanks, Stefan. Thank you everybody for attending and for hanging out with us for 3 hours on a Saturday. All righty. I'm going to wish you a fond farewell. Remember, we always do 2 things in this community. We stay green. And we
get this money.
Get this money.
That's what we do. See y'all later. Bye-bye, everyone.